Good afternoon, guys. Hey, this is Bruce Marshall from Simpler Trading with the nightly video update for Wednesday, January the 30th, and today is Fed Day. So we had a rip-roaring rally off of the Fed right here at 1 o'clock Central, and we just kept going. We gave back a little bit, but the S&P on the day was up 41 points. Pretty strong move, right? Let's check this out. Let's go to, let me clean this up a little bit. And in fact, we'll do this. We'll go to the futures and look at the ES. So this is a chart, a 2-day chart, and this has got the overnight. So yesterday, Tuesday, we were chopping kind of sideways, drifting lower kind of into the close, and then up all night as far as the futures trading. And then today, big move higher here from 2640 up to, basically 2690. So about 50 points kind of top to bottom. And, very encouraging. Basically, if you didn't see, Powell kind of backed off of the hawkish tone. We knew he was going to do that. He needed to do that to keep the market from really rolling over. If he would have said the wrong thing or implied or misspoken, about the direction of that the Fed was going to take, so forth, it could have gotten ugly today, and they know that. The Fed they knew that, and so I knew that they would come in dovish, but I thought a lot of it might be baked in. I was expecting a move higher, but typically what you get on a Fed day is, a gap up and then a fade, and either a fade on the day or maybe a continuation of the move, that you had pre-Fed. But this one went much further than typical, and nothing really typical in this market, or that we've been in for the last 6 weeks or so. It's just we've been getting these very erratic moves and so forth, and we know how that has been. So, how do we trade this from here, from this point? Well, it's easiest to look back out. Let's go to a 20-day chart, and we can see, this is what's amazing. We're at 2400. This is 20 days ago, and of course we've really been straight up. We're almost at 2700, 2690. So that's a pretty massive move off the bottom, and this was considered the Powell put. That's when Powell said, "Oh, sorry guys, I didn't mean to smash the market down right here with my comments. Maybe let me be a little dovish." And I said this in last week's video. This was all Powell, and this was all Powell for the most part. We've got some China and some other stuff thrown in there. We're starting to get a lot of earnings. That was one reason for the initial move today, is that we had positive earnings from, or Apple didn't do as bad as everyone thought they were going to do, and Boeing had good earnings. McDonald's had good earnings. Who else? We had lots of good earnings coming out this morning. So things are looking pretty good. So let me clean this back up, and we'll look at this. And so now, where do we go from here? And matter of fact, let me load voodoo lines on here. And I'm just looking at the S&P for now, and put my voodoo lines on here. And give me just a second. I will clean this up a little bit and take a look. Okay. So actually, let me do this. Sorry, give me just a second. All right. Okay. So what we've got here, this is the S&P. So we've had this massive move, off the low. This was when the Powell put was in. I think that's it. Actually, start from right there, but about 2400. So basically, that's the Fed going, you know what? We don't want this market to go lower than 2400. We're gonna start, switch from hawkish to dovish and all that kind of stuff. That's still yet to be determined, because we've got, obviously the rest of the year and more, to go with the Fed. But positive direction, everything is turned and so forth. Here's my question and concern is, where do we go from here? Obviously, tomorrow after the close tomorrow, we've got Amazon. Huge, could make or break the NASDAQ. If Amazon comes in with a big miss or something, it's not going to be pretty at all. I think they'll be fine. I think they'll have good earnings and all that. Friday, we've got payroll numbers. So is the market going to like that or not? And, of course, no one knows. What I do know is that there's a 200-day moving average here. Obviously, we've got 2,700, big psychological hurdle there. We've got the 2820 level here from that, that now is a 1, 2, this will be a quadruple top, or test of that level. And we didn't quite get to it this time, but right above that we've got a snow line there at 2829. So 2820, 2829, 2800 is another huge psychological level. Lots of levels to get through if we are going to indeed keep going up. And right now the direction is up. Things are turning and people aren't as bearish and all that kind of stuff. So that's good. We want to play it to the upside while the momentum is to the upside. However, the fact that we have moved this far and the fact that we're now above this fire line, so that becomes a little support, but the fact that all the bears are starting to say, well, it's time to get bullish. About the time everybody gets bullish, we know how this works. As soon as everybody gets bullish, then of course that's when they take it back down. So I still think this 2540, the snow line here, is still in play. I think probably on the upper end, this 28, 29 skyline is played, probably 28.20 right there actually first. So I like to look at the market in ranges as far as what I expect, and I expect that will be the range for the next, let's just say, month. Now we could go straight up here or we could go straight down here. More likely we probably chop up here, maybe come back. I don't know how the pattern will flush out in the end, but what I do know is that the higher we go, the more I'm willing to kind of start putting a little hedging on the bottom, play it long to the upside with hedging, on the downside in case we do get a flush. It's not out of reason to think that we could come back down here or lower if we get, we're in a hypersensitive news-driven market. If something happens that derails negotiation with China, like the Huawei news or anything like that, I think the Fed's kind of out of the way. But the other thing too is the general consensus of the S&P 500 earnings, which we're not there yet, but we will be in another probably week or maybe two. We're kind of getting over the hump. Amazon will be probably the last, one of the biggest ones by far, as far as earnings go. So everything looks pretty good, but we're not out of the woods yet. So I'm starting to trade this thing a little more bullish to the upside with some hedging on the downside. That's the only way we can do it right now. I'm still lighter than normal just because I just don't really trust this rally. You've got to play it in the direction of momentum, and the momentum's up. But I'm still very suspect of there will be a stall out point at some point. It's 2,700. If it's a 200-day, if it's here, I would be really surprised if we keep going with this momentum straight up like this. This is, that would be pretty incredible if it happens. Relative to everything we've seen in the past. In fact, let me go out here. Where are we? Okay. So, again, this move is 2x what this move was, and we thought this one was big, right? So I don't think we're back off to the races and going this way anytime soon. We've got a lot more things to work out over here before we do. So again, all that being said, going to try to play this to the upside with some hedging and on the downside, and trade it a little lighter than normal, especially until we get into next week after payrolls on Friday. So I expect that to be bullish for the market on Friday. So we shall see. But with that, let me wind it up here, and hope this helps, and I will see you guys at the next update. Thanks a lot.